Welcome in this video where ZBCN coin will turn upwards. We will analyze it. Don't forget to subscribe and please watch to the end to understand. When we carefully examine the current technical structure on the chart, one of the most significant formations that stands out is a clear descending trend structure in which the price has been moving for a long time. This descending trend has emerged as a result of selling pressure experienced in the past and has caused the price to form progressively lower highs and lower lows. However, although this structure may initially seem negative, it actually represents a potential opportunity zone for many investors. In technical analysis, the breakout of descending trends is often interpreted as a strong reversal signal, and such breakouts can mark the beginning of long-term upward movements. The upper trend line that defines the boundaries of this descending trend acts like an invisible ceiling for the price, pushing it down with each attempt to rise. However, observant traders may notice that this line is starting to weaken, with the price touching it more frequently and appearing to gather strength to break through. This could indicate that the end of the descending trend is near and that a potential breakout to the upside might be approaching. When examining the price action, it's evident that each contact with this descending trend line is met with a weaker selling response. This suggests that the strength of the sellers is diminishing. Market participants are no longer as willing to maintain the downtrend, and buyers are gradually starting to take control. Such a structure typically signals that a trend reversal may be on the horizon. In other words, the market might be preparing to leave behind the old bearish dynamics. The most critical stage begins when the price breaks above this descending trend line. If the price surpasses this structural barrier with strong and decisive momentum, it is considered a significant trend reversal signal in technical analysis. If this breakout is followed by a retest, meaning the price returns to the broken trend line and bounces upward from it, the bullish scenario becomes even more robust and technically confirmed. Following such a breakout, market psychology often begins to shift. Investors who were previously expecting further declines or remained on the sidelines now begin to act on the bullish momentum, new positions are opened, and volume tends to increase. All of these developments contribute to upward price acceleration. The breakout of a descending trend not only represents a short-term move, but also lays the foundation for a potential medium to long-term uptrend. Breaking a descending trend line is also highly significant from an investor psychology perspective. These trend lines are not just technical barriers, they also represent collective investor beliefs. A market that has been in a downtrend for an extended period causes participants to act cautiously. However, once the descending trend is broken, this cautious attitude often gives way to bold buying. This injects fresh energy into the market and becomes one of the most important factors supporting the upward movement. One of the most common scenarios following such breakouts is rapid and sharp price increases. When a descending trend is broken, the breakout triggers not only a technical structure, but also large buy orders that have been waiting on the sidelines. Algorithmic trading systems and professional investors closely monitor these breakouts, and when the price rises above a certain level, they enter the market aggressively. This leads to increased volume and a rapid upward momentum in price. In some cases, such breakouts can be the beginning of larger and longer-term formations. For example, after the descending trend is broken, a reverse head and shoulders, a cup and handle, or a flag formation might appear on the chart. This indicates that after the breakout, longer-term bullish targets may technically become achievable, but we can't base our analysis on trends alone. Let's also take a look at other metrics. Stay tuned. Upon careful examination of the chart, it is clearly evident that the current price level corresponds to a highly meaningful and strategic technical zone. This area has historically acted as a reaction zone, where the price resisted downward pressure and buyers entered the market strongly. Such zones are not only seen as horizontal support and resistance levels in technical analysis, but also as reflections of market psychology and the collective behavior patterns of investors. Therefore, the fact that the price has now reached this area is not coincidental, but rather a natural part of the technical structure. Reaction zones are typically areas where the price has previously made sharp upward moves or quickly recovered from declines. These are zones where buyers have previously entered the market with significant force, leaving behind clear footprints. As a result, when the price returns to these areas, it tends to exhibit similar behavior. In the current situation, the price has once again touched a zone where buyers have shown strong reactions in the past. Such pullbacks are common in technical analysis and often result in strong rebounds. In this context, it is a reasonable scenario to expect the price to bounce from this zone and re-enter an uptrend. Furthermore, This area is not just a horizontal support, but also aligns with other technical signals that could support upward movement. For example, the convergence with a previously established upward trend line, a key Fibonacci retracement level, moving averages, or volume-supported zones can further strengthen this area. These kinds of confluent support zones make it much more likely for the price to stabilize here and then initiate an upward move. From an investor psychology perspective, these zones are often viewed as decision moments. When the price reaches such an area, many market participants recall past price action and begin to reposition accordingly. As buy orders increase, volume rises, becoming one of the key catalysts for the price to move upward. As in the past, the market may regain confidence in this zone, and this renewed confidence could be reflected in a sharp upward price movement. The price action in this zone should be monitored closely. A green candlestick or a formation that forms here could serve as a technical signal of a potential upward reversal. Additionally, a bounce from this area may not just represent a short-term reaction, but could also be the beginning of a new bullish wave. This bullish wave may have the potential to test previous highs and possibly lead to a lasting shift in the overall market trend. If the price completes its movement in this zone and begins to gain upward momentum, it could present a strong buying opportunity for investors. Areas where prices arrive after a decline often offer low-risk, high-reward potential. Strategic positioning at this point could allow investors to enter at the beginning of a trend, thereby maximizing potential gains. Of course, such decisions should always be evaluated in conjunction with other technical factors and proper risk management strategies. Moreover, historical data shows that moves originating from such reaction zones have often resulted in high-volume rallies over time. This indicates that if the price makes a decision here and turns upward, market confidence could rapidly increase, and many investors may re-enter the market. This would not only result in a short-term bounce, but also lay the groundwork for a longer-term trend. A careful and comprehensive technical analysis of the chart reveals that the price is currently approaching a highly significant level and has even started to test it. The main factor that defines the technical importance of this level is the presence of the 200-day exponential moving average EMA line. In technical analysis, the 200 EMA is one of the most commonly used indicators to determine the direction of the long-term trend and to understand the overall market sentiment. It has repeatedly acted as strong support and resistance in the past, and is a tool that investors trust when making directional decisions. The fact that the price is currently moving near this line indicates that the market is at a critical technical threshold. More importantly, if the price breaks above this line and holds, this development will be interpreted by market participants not just as a short-term move, but as the beginning of a long-term uptrend. Staying above the 200 EMA is a strong signal that the price is no longer in a downtrend and is preparing to enter a new bullish phase. Therefore, breaking above this level will open the door to strategic buy decisions for many investors. The 200 EMA is a highly reliable indicator for determining the overall market trend. If the price is trading below this line, the market is generally under downward pressure, and investors tend to be more cautious. However, when the price moves above this line, the sentiment completely changes. At that point, the market is considered to be under the control of buyers. The 200 EMA represents the long-term trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.